Hey guys, what's going on? Welcome to the next video in this series. I'm DeMarco, and today we're going to be talking about moving averages, MACD, and RSI. Let's get into it. So a moving average is a smoothed out depiction of the average price over a period of time for any given financial instrument. Some of the most popular moving averages are the 10, 20, the 50, the 100, and the 200 moving average. So let's take a look at the chart and add some moving averages to our chart in TradingView. So we're in TradingView right now, and we're going to add a moving average to our chart. So click on the indicators button here, type in moving average. And there's two types of moving averages. One is a simple moving average, which will be labeled moving average, and then moving average exponential. The difference is that the moving average exponential relies on information that's more recent. So it's a little bit heavier weighted, it's a little bit sharper than the simple moving average. And both of them have a place in your trading. So for right now, for this example, we're just gonna pull up a moving average. So we added the moving average to our chart, and it looks like the moving average is the 9-day period. So we're gonna change that. We're going to make that a 200 moving average. 200 days. So it looks like Tesla is trading well above the 200 moving average, which is good. So for long-term growth, right? Now we're going to add a couple more moving averages to our chart to see. And this is on the weekly chart. This is not the daily chart. We can change it to the daily chart and the moving average will be a little bit different. You'll see. So on the daily chart, we can see that the moving average is a little bit closer to the price. And usually the 200 moving average acts as a support. It can be a resistance at some point, but most of the time, because it's a longer period of time, the price will generally stay above that. If it's bullish, or below that for a longer period of time, if it's bearish. Now let's add another moving average to our chart. So we're just going to do the same thing. Moving average. And let's put in the 50 moving average. And you can change the style, you can change the color of these if you want. There's a lot that you can do here in TradingView. So now we have a 50 moving average. So instead of the longer period, the 200, we're relying on the last 50 days average price. So you can see here that at this point here, Tesla's price dropped below the 50. So some could say that this might be a bearish signal in the short term or near term because it's below the 50 moving average, which it did for a little bit. Then it crossed up and then it came back down, found a little bit of support at the 200 and moved up. So there's some drawbacks to using moving averages in your trading. It's considered a lagging indicator because it's based on historical data. So it is definitely a lagging indicator and something that you should consider in your trading when you're using the moving average. Now let's add another moving average. You can add as many as you want. Some people have a whole bunch of moving averages. Let's add a moving average. Let's use an exponential moving average. So more recent price. So what I want to do with the exponential moving average is use, let's say, the 21. So the last 21 days, the last 3 weeks. We're going to add that to our chart. We'll change the color to red or yellow to see it a little bit better. And we can see here. Now, when you're using exponential moving average with other moving averages, some people like to see crossovers. And that's a signal to them in their trading that the price may be going in a certain direction. For instance, if a lower moving average, such as the 21 exponential moving average, crosses over the 50 moving average like we see here, that might be an indicator that, hey, the price is crossing below the 50. This might be a time to short the stock. And you can see in many instances this does happen where the price does cross over in the short term. Somebody could take an entry here and ride it all the way down to here and make profit. Now, it doesn't always happen like this. It's, you have to use some other things that could help you to make this decision. So I labeled the moving averages for you so you can see them a little bit more clearly. And I also wanted to point out too, like where there's possible trades. So right here, we already mentioned that this could be a possible trade. If you took an entry, you use this as a signal, and you wrote it down here. And we know that the 200 SMA is usually either a support or a resistance, whether it's an uptrend or downtrend. So in this case, Tesla was in an uptrend, so it should be a support. It's not always the case, but majority of the time it is. And when we see the price come down like this so fast, almost impulsively, and bounces up pretty quickly, that could be a sign that, okay, this area is probably going to get bought up again quick if it comes back to this area. So now let's take a look at the chart. Let's say that you missed this trade. Now you're looking for an entry for it to go to the upside. So if you look at the chart, and we're using the strategy by using the crossover, we can see where it crossed over. So right here it crossed over, but there's not much there, right? So like we would see this, the chart would look like this. And we would see this crossover here. And we're like, okay, maybe we should buy here. So let's say we bought here. In this case, we would have to hold it quite a while because we would end up losing money. It's a very short, yeah, it crosses over, but it comes back down, it retests the 50, and the price falls below the 50, below the 21, all the way to the 200. So in this case, we might have lost that trade. So that's why I'm saying this is a lagging indicator. You can't always use it, just this indicator to tell you to enter and exit a trade. But if we know that the 200 is an SMA and this level got bought up, this 560 level got bought up so quickly, we can see the wick here, it got bought up very quickly. Then we could say, okay, maybe this is going to get bought up again. You know, this might be an area where investors want to buy the price at 560. They consider it undervalued, and it's a good entry point. And it's also the 200 SMA. So it comes back down, hits the SMA, finds a little bit of support here. It seems like it's just consolidating a little bit. And you can look at the moving averages, and the 21 moving average doesn't cross over the 200. It actually meets it, it kisses it, and it goes back up. So that could be a signal right there that, okay, it's possibly going to go higher. It's just consolidating at a lower price. Maybe the price is going to go higher. So now what do? Do we enter there? That would be very aggressive. Instead of that, you could wait until it crosses over the 50. So here we have the yellow line is the 21, and this greenish bluish line is the 50. So at this point here, we had a crossover, right? Now, sometimes you want to wait till it comes back and test the line, okay? It crossed over here. You're not going to enter on this candle because it's a red candle. It's still, there's not a lot of momentum to the upside yet. Red candles. We're waiting. Comes back down. Okay, it's testing this 50 moving average. It's testing the 200 moving average. And maybe here you enter because you see this bullish action here, this price going up here. Maybe here you enter. Maybe even here you enter, right? At 686. Either of these, because now we're well above the 21, we're above the 50, we're above the 200. So maybe you enter here. Either of these will be fine. And this is a swing trade because we're on the daily chart. Almost $125 per share of Tesla. It's about 20% gain. And that was from June to September for a swing trade. So here's another example. We have Apple here, and this is from August. So I'm just looking back at some of the charts here where there was possible opportunities to use the moving averages for an entry. So right here, we have this crossover, the 21 crossing above the 50, and the price is above the 50. And it seems like the 200 might be a resistance level. Comes back down, it tests here. This might be a signal for you to enter. And if you did enter here and you held it for a few days, that's around $3 per share you would have made. and 2.24%, which is not bad. It's not a bad trade. So now we're going to take a look at the MACD and the RSI. Now the MACD is the moving average convergence divergence, and it's a momentum indicator to indicate when the stock or when the security or when the financial instrument is going to move in a certain direction. So let's add it to our chart here, MACD. And here we go. So here we are with the MACD, and this is what I was just mentioning, was that right here might have been a signal to enter, right? Because we have this crossover to the upside. Not always like that, but in this case we do. Now, what's the MACD at this level? Well, it looks like the MACD is starting to move up. It's moving up a little bit higher here, above the zero line, above zero. So obviously when it's above zero, it's going to be more bullish. When it's below, it's more bearish. And we have two different lines. Now we have a signal line here and the baseline. So the signal line is in the orange. And whenever there's a crossover on the MACD, that's also a time when we see a change in the momentum. So even before the moving average crossed over here, we can look at on the MACD and see that there was a crossover here. And if we took this as a signal and we can see the momentum is changing, the dark red is that there's a lot of momentum going into the downside. Then it turns a little bit pink when it's slowing down the momentum of the downside. And now it's turning green. So if you took an entry here on this green candle and you held it for a few days, you would have made a profit. That's 3% right there. $4 per share, $4.46 per share. So that's another signal to you, and you can use this in conjunction with the moving averages. And sometimes this is, you can see this crossover here, you're thinking, okay, it's coming down. Well, it is coming down, and there's negative momentum coming down. Maybe you take a short entry here and ride it down, and then you see this crossover because it's going, once that crosses over, it's an indicator, oh, maybe it's going up. But again, even the MACD is a lagging indicator. These are basic indicators to get you started in trading. There is a lot more that you need to learn to be successful consistently. So these are some of the tools that I started out with a year ago that have helped me to build in my trading journey. And hopefully they'll help you too. Now let's add another indicator, the RSI, the Relative Strength Index. So what does this tell us? The Relative Strength Index tells us when a stock is overbought or oversold at a given time. So whenever it's above this line here, above 70, it's overbought. Whenever it's below 30, or yes, around 30, it's oversold. You want to buy low and sell high, right? So when a stock is oversold, you want to buy it when it's oversold because you're probably getting a good deal. So now let's take a look at the MACD, the RSI, and the moving averages and how they work together. So here we have the crossover here on August 19th. And we see here that it was oversold at this point here on August 19th. Let me increase this. So you can see these three places here. So it's oversold here. Now, once it finds that bottom, it moves up. So you know the RSI was oversold and now it's still low. And whenever it's in this middle range here, it doesn't mean that it's oversold, overbought. It's just gaining some strength, you could say. So it's just a good range, a healthy range for the stock to be. Whenever it's overextended, like up here, it's overbought. It's the price is too expensive. It's possibly going to come down. It's losing momentum. There's a lot of different things. So now let's take a look here. So the RSI is below 30, so it's oversold. So we know it's oversold. It might be a good position. It might be a good time to buy right here if you use this signal. And if you use this signal and the MACD, and you can see that, okay, it's oversold. Okay, the signal line is crossing above. Maybe the momentum's changing to the plus side. So that's 2 points now that you have confirmation. So you take an entry there and you could ride it up. Same thing. If you waited until this, until the moving average cross, because the moving average is lagging, right? So that's why the time has passed and we already see this, And now we see the moving average. So that could be a third point. Okay, I'm going to enter here because this is the third point. I made my confirmation. That's good for me for my strategy. I want to enter here. Some people are more aggressive and just use this RSI. Some people just use the MACD and RSI. You can use whatever you want to use in your trading. So take a look at some charts and look at these different patterns. Look at what happens when the price crosses over the moving averages on the 21, on the 50, the 100, the 200, and see how that works with the price. And the more that you see these charts, the more that you're going to realize certain patterns and things that are happening within the chart. And that's how it's going to help you to make a lot better predictions during your trading. So moving averages, MACD, and RSI, these are just the basics, guys, and to understand some dynamic price movement. There's a lot of other tools that you need to learn or that you should learn to help sharpen up your trading. But these are just some that I started out with in the beginning that helped me when I first started trading over a year ago. I hope you guys found this video helpful. Make sure to like and subscribe, leave some comments below, and I'll check you guys later in the next video.